Hi, I'm Tom Lydon, editor of ETF Trends here in Hollywood, Florida at the ETF.com conference. And I'm here with Jan van Eck, who's CEO of Van Eck Global and also the proprietor of the Market Vectors ETFs. Jan, great to have you with us.
Good to be here, Tom.
So let's talk about energy. With this fall in energy prices, a lot of portfolio managers, advisors are trying to have this discussion with clients. How do you play that? What are some creative ways we might think about playing that marketplace?
Right, we're getting a lot of client interest. How do I take advantage of this dramatic fall in energy prices? Look, there's two ways. One is buying ETFs that track the commodity itself. Let's take USO. The issue that we've always pointed out with buying commodities is the shape of the futures curve, which can hurt you. So the difference, I won't get too technical, between the March and April contacts is about 70 cents. It's costing you 20% a year right now because of the shape of the futures curve to play oil. So if oil doesn't rally quickly, you've got some degradation going there. We as a house generally favor commodity equities because they have a longer term view. We think it's going to be bumpy here for a little bit. Certainly past 2016, we're more optimistic, but energy equities, high quality energy equities can survive that recovery, and that's our primary bet.
So it's the companies that invest in the energy business, right, whether they're pulling it out of the ground or shipping it somewhere?
Primarily the E&Ps, right,
okay.
the producers, because the MLPs, the refiners, the integrated haven't fallen as much, so they wouldn't recover as much when we get through this mayhem.
Okay, so let's shift over to China. You're very bullish on China, and China's been kind of a little bit lackluster, although lately things have been picking up. What are your thoughts?
Right, so from a massive big picture view, if you look at the next 10 years, where is the growth in the world going to come from? Everyone, the IMF, the World Bank says Asia, primarily. So you look at China, Indonesia, and India have growing demographics and pro-growth policies. Right, as I say, it's hard for Europe to sell more cars when their population is shrinking. And that's what you've got for the next 10 years. So from a 10-year view, we like Asia. You've got emerging markets. China's coming out of a 4-year horrible bear market, right, so valuations are attractive, like the Vanguard speaker said. And then China's doing a lot of reforms over the last 6 months that I think reduce the systemic risk in China for investors. It means the financial system or real estate market is not going to bring the whole market down, so I think you can feel more comfortable.
Okay, I can't let this go while I've got you. You've really specialized in a variety of ways to invest in commodities, and from a standpoint, you believe strongly that advisors should be thinking about diversification in those areas.
Right.
The gold market has been beat up tremendously, and you have two of the gold miner ETFs,
right,
GDX, GDXJ, but it's amazing, even though the market's been down the last couple of years, there are a lot of smart money, institutional money, advisor money. We've seen the volumes, it's coming there. When eventually things revert back to the mean?
Yeah, I think the companies, as opposed to the commodity,
right, have
faced a lot of cost pressures, which have mean they've really underperformed bullion. And bullion itself has had a fallback. I think the oil price will certainly help them.
Yes.
I'm a buyer, and to the point, people have not really been selling the gold miners as much as the bullion. The bullion had a lot of redemptions over the last couple of years, and people are keeping their miner exposure. So
and you look at valuations, I mean,
right,
single digit in some cases, right?
Yeah.
So anyway.
And you have the takeover phenomenon, right, where the smaller companies are a little bit more pressured. Maybe once in a while, there was a bid last week, so maybe that helps the miners.
Well,
we're hoping.
It's exciting. Finally, you have an exciting website, Vetr, VETR.com.
Yeah.
So tell us about it.
Okay, well, Vetr is totally separate from Van Eck, but it is basically a social media for individual investors. If you want to check out or vet an individual stock or an ETF, go to that site, and you can sort of, it's sources for other people are thinking, the sell side, your friends, and things like that. So it's a great way to check things out.
We provide content on Vetr as well, and it's just been amazing to see that grow. So another great informational source.
Well, I think individuals are all going, it's interesting, they're all going to the internet to get information.
Yeah.
And so how do they ultimately consume that information? And I think that's open. And they go to your site, they go to Morningstar, and we'll see how that evolves.
Great, excellent. Jan, great seeing you.
Thanks, Tom.
Thank you.
Okay, thanks for the interview.